Well, it's confessional time here on this channel, and with the noise being at peak levels and everybody worried about the Fed crashing the market or the illness kicking up again and crashing the market or inflation crashing the market or basically everything crashing the market, we need to talk about what is actually worse than a stock market crash, because if you do this, it will crash your portfolio even in a massive bull market run. And on the off chance the market does actually crash, it's going to be way worse for you if you make these mistakes. Now, how do I know they are worse and you can lose huge money in a bull run? Well, simple. Because I've done them all and lost a lot of money. Like a lot of money, guys, I'm not kidding. So I want to share those experiences with you today, and if it only helps out just one of you all out there, then it's totally worth the time. And all I ask for in return is for you to hit that like button and subscribe to this channel if you appreciate the fact that I do not put ads in the middle of my videos and then stretch them out for 20 minutes. I respect your time, so let's get into it. So the first mistake I made was in the late 1990s, if you remember that time. And I was a young hotshot investor who just knew it all. Now this was pre-smartphone and really pre-internet for most people. I know I sure wasn't on the internet back then. So I did what every smart person did, I thought. I looked at what did great the year before and just invested based on that. So I simply made the massive mistake of basing my future returns on last year's performance. I don't care if Tesla 10x last year, it's not going to 10x every year no matter what happens. It may only have one more 10x run in it or 5 more 10x runs in it or who knows how many 10x runs, and it may never 10x run again. The only thing I do know is it will not 10x every year from here on out forever. Now, I'm not saying Tesla won't do great, but a 10x every year is just ridiculous for any stock. Not just Tesla, I'm not bashing them, that goes for any stock. But here's exactly what I did way back in the 90s. I distinctly remember seeing the 78% return on this stock and calculating how much money it would be worth in 10 years if it just kept getting the 78% return. I was going to be rich very soon and investing was just easy. And I even started to dream a little bit, like about nice houses and cars and ladies and just this jet set life. Only losers lose money, and you have to be an idiot to not make a fortune, right? This is just too easy. Well, this mistake cost me about 40% of my entire portfolio the very first year I did it. So I guess I was the idiot after all. Now this second mistake is one that everyone, even experienced investors, struggle with because it's just basically human nature. You must control this or you will get destroyed and destroyed quickly. And that would be emotions, and this one plays into the next point that is the most dangerous and the one you are most vulnerable to. But emotions are what makes you so vulnerable in the first place, so let's cover it first and then we'll get on to that one. Now raise your hand if your stock that you love has ever been on a big run and you just feel like it's gonna leave Earth and just never come back. Right here, I've done it a lot of times. Or raise your hand if you have ever owned a stock and it started to sink quickly and you felt you needed to sell and take your losses, so you panic sell, or even worse, you get the bright idea to sell and then try to time the bottom. Right here, done that one too. And those of you that didn't raise your hand, you were lying, by the way. There's no way if you've been investing for any amount of time that you hadn't felt either one of those. FOMO buying and panic selling are the two biggest killers to your portfolio. It's literally where the meme buy high, sell low comes from. And you know what? It's actually kind of funny, but it's not really funny when you realize it has happened to so many people. I have done this 100 times. Instead of being patient and waiting on my price target to hit, I have jumped too early and then watched as the stock continue to fall to my price target, just a few weeks later. So if I was patient, I could have bought it at a better price, but instead I wasn't, and it cost me money. And I've done the opposite. I've sold too early thinking I bought the wrong stock and my thesis was wrong with the stock, when in reality, it was just short-term traders doing short-term things, which cost me big money and messed with my head because it turned right around and shot right back up, and I was left trying to guess if it was another trap or was I just missing a big run. All of those are emotionally driven questions that cost me big money, or they cost me to miss some great stocks altogether, like I don't own them because I screwed that all up. How do you fight emotions? Well, that's pretty simple actually. You have a plan, you do a proper valuation, and you do your due diligence on a stock to where you know what you are going to do when it goes up or down, and you know when it's undervalued and you need to add more, or overvalued and you need to just hold tight and not buy more. But because having a plan and doing a proper valuation takes hours, days, sometimes weeks to do, and it's just a lot of work, people sometimes fall into the last mistake that will destroy your portfolio even in a bull market, and that would be trusting the wrong people. How many of you out there bought NIO at $60 or Lucid at $60 or even Bingo at $15 or any of the penny stocks that had really nothing behind them, but they were going to the moon next month? If you did, my guess was it was based on a video you saw on YouTube, and it has been devastating to your portfolio these past few months despite stocks continuing to make all-time highs. I saw video after video on YouTube by small and big YouTubers alike where they just basically pulled up a chart, showed you what it did last month or last quarter, and then kind of, drew the line where it was going to be the next quarter or the next month. Basically making the first mistake we just talked about, basing where a stock was going based on the last quarter or last month's performance, not based on the valuation or revenue growth or really anything other than just hype. And I put out videos in the madness that was January and February saying I want no part of Lucid at $20 at the time, much less $60. And oh my gosh, the hate I got for saying bingo made no sense at $8, much less $15 based on valuations. I wasn't doing anything special at all. I just looked at the valuations, which always end up mattering over the long run, and they just kind of didn't match up with what was going on in the stock. I honestly don't think there was malicious intent with the YouTubers that were pumping them, except for the guys getting paid to promote the penny stocks. And this video right up here lists out a few of the YouTubers I think are the real deal if you want my opinion on some of them. Now, I don't know who did and didn't take the money out there when they were offered it, but if my little channel was getting offered $10,000 plus for a positive video on a penny stock, my guess is some took the money to promote those stocks. $10,000 is chump change in exchange for your integrity. No amount of money can replace your integrity, I promise guys. It's why I dumped all the sponsors and I don't put ads in my videos or anything else outside of promoting my group that I stand behind 100% because I see daily the changes we are making in people's investing lives. But forget about all that stuff. The best way to avoid getting taken advantage of is by learning how to invest in yourself, and when you hear something that is too good to be true, it's always too good to be true. Don't leave your investing in anyone else's hands. You need to take control and responsibility for your future, and a great start is avoiding these mistakes that I personally made. So hopefully seeing the mistakes that I have made helps you guys out there, and you found a lot of value in this style video. So let me know if this was helpful or not down in the comments section, and I'll read them all, and I promise you if you want more of them, I'll provide more of them. So thanks for watching, and we'll see you in the next one.